Hey, it's Phil Streible with Blue Line Futures. Kind of want to give you guys a quick intraday update. I'm getting a lot of questions here about what's going on in this metals markets here because it's been a very volatile session. I mean, my keyboard, the thing was just smoking a second ago. So you rewind to where we started off. Remember, crude oil futures up $2. Mideast geopolitical tensions still taking off. A lot of money managers rotating out of the gold market into the crude oil market and other participants because they want that pure price play on Middle East conflict and crude oil as the trade to be in. Remember, if Iran shuts down the Straits of Hormuz, you got 20 million barrels of crude oil going through a day. Crude oil futures are going to go parabolic. There were even news circulations that $100 crude could be in the cards if certain events happen. So that's the first part where you get gold futures under a little bit of pressure. Now, oil prices start to go up, and if you look at many of these other commodities out here, like the agricultural products, they're going up as well. What does that mean? Inflation probably already bottomed and it's starting to turn back higher. So in order to combat that, the Federal Reserve will not end up making this 50 basis point cuts. And I think that's what Jerome Powell was thinking. That's why he was a little bit more hawkish at that last meeting. He was saying they're going to be data dependent and they're also going to, they're on no set preset course. So what happens is you start to see those inflation expectations go down, the dollar index goes up, that's what keeps the lid on the gold market. Now, in conjunction with that, the gold-silver ratio at about 84-1, we get a story that comes out at about 8:49 that says the London Metals Exchange is closely monitoring the tightness in the aluminum market, has the necessary controls to ensure market orderliness. Now, remember what I told you about a squeeze, short squeeze in silver. One thing you want to monitor is the spread between December and March silver, right around 35, 39 cents. No real parabolicness to it, so that's why there's no physical squeeze on silver. You go to that aluminum market, holy smokes, that thing all of a sudden just goes parabolic like this. There's a squeeze going on in the aluminum market. Aluminum is closely correlated to copper, platinum, silver, and that's why silver futures, once they got over that critical level 32.15, they really took off to the races. Now, as the day started to unfold, we did see that dollar index keep going up. We saw some of this profit taking come in on the silver market. So we retested the lows on the silver as far as going back to unchanged from pre-breakout territory, and now I think people will start to reload and lift that contract back up. Remember, when you get a breakout to the upside, you get increased volatility. Increased volatility, bigger swings in the market. So have your plan, trade your plan, stick to your guns. You got any questions, give me a call, 312-858-7303. Futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.